SBA loans. So if you're trying to raise some capital for your business, let's talk about how to get an SBA loan, how to get approved as fast as possible. And look, I recently helped my dad get an SBA loan, and I've helped some of my tax clients navigate these types of loans as well. So I'm definitely qualified to tell you what it takes. So in this video, what I want to do is cover the different types of SBA loans, how long it takes to get approved for an SBA loan, and the different types of requirements and qualifications that you need to know about, and a lot more throughout the way. It's my goal to give you a complete video guide on everything you need to know about getting an SBA loan. But before I dive in, let me quickly introduce myself. I'm Sean, self-made millionaire and entrepreneur, and I'm on a mission to help people start, fund, and grow their business. As always, what I'm going to do is put the timestamps for this video somewhere down in the description below so you can skip to the part that you want to learn the most about. But look, if you are a beginner, do yourself a favor and watch this entire video. All right, let's go ahead and dive in with number one. What is an SBA loan? So SBA stands for Small Business Administration, and they are a government agency that provides resources to small businesses all across the United States. Now, many people think that it is the SBA that loans out the money, but that's not really how it works. Let me explain. So when you apply for an SBA loan, you are really getting the money from a standard lending institution like a bank, and you make loan payments directly to that bank. What the SBA does is they will guarantee your part of the loan. So for example, the SBA may pay back a certain percentage, let's say 85% of a certain type of loan, meaning that if you can't repay the bank, the SBA will cover 85% of the loan. So it's kind of like the SBA is a co-signer of you getting a traditional bank loan. And so when you have the SBA that is backing you, then traditional lending institutions like banks are more willing to give you money even if your business is brand new or has very little revenue or even has poor credit scores. So let's go ahead and move on to number two and talk about some pros and some cons of SBA loans. So let's do a side-by-side comparison when it comes to the pros and the cons of an SBA loan. On this side, we have the pros, and on this side, we have the cons. Okay, so the first pro of an SBA loan is you have long repayment terms. In business, cash flow is extremely important. Ideally, you want to accelerate your revenue, delay your expenses, and maximize your cash flow so that you can keep your business operating smoothly. So having longer repayment terms means that you will also have a smaller loan payment, and in the long run, you will have more time to generate positive cash flow and pay the loan back. On the other hand, the first con is a long application process. So the SBA, like many other government agencies, are kind of slow, right? And it takes them time to correspond back with you on your application. So if you are in desperate need of capital and you need money for your business immediately, then this may not be a great option to pursue because banks or traditional lenders typically can get you money super fast, sometimes within the same week. Okay, the next pro of an SBA loan are affordable interest rates. This ties in again with the cash flow benefit and just awesome overall because you don't have to pay too much money to borrow money. On the other hand, the next con is lots of paperwork. Now, if you're unorganized like me, then this is a major con because the SBA wants to know everything. Not just about your business, but about you personally. So you're going to have to elaborate on your business history, your personal history, and all your streams of income. Okay, the next pro of an SBA loan is that it requires smaller down payments, which is another great benefit from a cash perspective. For example, let's say that you apply for a $100,000 loan. One traditional loan may require a 20% down payment or $20,000, and an SBA loan may require only a 10% down payment or $10,000. Well, the SBA loan leaves you with an extra $10,000 in cash to use as a reserve or reinvest back into your business. But with that pro comes another con, which is competition. Yes, since there are so many benefits of getting an SBA loan, many companies apply. But the SBA is limited to how many loans it can issue every year. So that means that usually you will have to make sure you're completing a very compelling application, make a good case for why you should get the loan, show them how you're going to use the money, and so on. However, the good news is that the government has recently released more funding to small businesses through the SBA, so more companies are getting approved. The next pro is a variety of loans, because there are many different types of SBA loans, which I'm going to cover next. So that really allows you to put together a custom loan that can be specifically tailored to your current business needs. Okay, now that you know about some of the high-level pros and cons, let's move on to number 3 and talk about the different types of SBA loans. But really quick, before I do, if you are enjoying this video, please do me a favor and hit the like button for the YouTube algorithm. It goes a long way in helping this video reach more people like you who want to learn about SBA loans, and subscribe for more great content. I really would appreciate it. Okay, number 3, types of SBA loans. So I'm gonna cover 4 types of SBA loans. I'm gonna talk about how much money you can get, the rates, the terms, and what the loans are most suitable for. One of the most popular types of SBA loans is the 7A General Business Financing Loan. Now, this is a general purpose loan, so with the 7A, you can do a lot. You can use it to expand your business, you can use it to refinance existing business debt, or buy a commercial real estate property, like maybe a physical store location or something similar. The 7A loan covers a lot. And with this, you can get up to $5 million when you apply for the loan, and typically the interest rate is somewhere between 8 to 12%. Also, the term is up to 10 years unless you're doing something with real estate. Then you can get up to 25 years, which is great because the typical business loan is only about 5 years, so this one doubles that. Another popular loan is the SBA Micro Loan Program. This is a better option for companies that are in the startup phases or consider themselves to be relatively small and less likely to qualify for a 7A loan. Now, with a micro loan, you can get up to $50,000, and the interest rates are usually between 7 to 9%, which is still really great for a commercial loan. The term of the loan is 6 years, which of course is less than a 7A loan, but it still beats the average of a 3 to 5 year term. Okay, another common SBA loan is the 504 Fixed Asset Loan. This loan is used specifically for purchasing fixed business assets like machinery equipment or commercial real estate properties. You can get up to $5.5 million when you apply for this loan, and the typical interest rates are between 4 to 5%, which is phenomenal. The terms are great as well, usually with an option to go with a 10 or 20 year term. Another SBA loan that many people are now familiar with after the economy got shut down are SBA disaster loans. These typically are for businesses who are trying to recover from a disaster that damaged their business. And a lot of these loans were given out as an emergency as a response to the worldwide virus. If a disaster does happen to your business, you can get up to $2 million for 30 years at an interest rate of 3 to 4%. So I'm sure after looking through all these options, you're probably eyeing the 7A loan or the micro loan. So let's go ahead and talk about how to qualify for either of those options with number 4, who is eligible for an SBA loan. So the great news is the high-level requirements for an SBA loan are super simple. Number 1, your business must be based in the United States. And number 2, your business must be a for-profit organization. So almost any business in America can apply. Almost, because there are some exceptions and exclusions. Let's go through this list. So if the business mainly earns passive income, they are not allowed to apply. So that could rule out some real estate investors or companies like laundromats. If the business is a life insurance company, that rules them out. If the business earns most of its revenue from gambling activities, or if the business is primarily engaged in politics or lobbying, and if the business earns revenue by lending money to others. If you fit any of those categories, then you cannot apply for an SBA loan. Luckily, these exceptions don't apply to the majority of businesses in the United States. Now remember, SBA loans are really just backing you to get more traditional loans, so there may be other rules that banks have that you need to adhere to as well. Okay, so now you know what an SBA loan is, you know the types, and you know who's eligible for it. Let's talk about number 5, how to actually get an SBA loan step by step. So I have 5 very important tips and steps that you'll want to follow to get an SBA loan. Step number 1, establish your business. So Fundera did an analysis and they found that companies who are at least 2 to 4 years old have a much higher chance of getting approved for an SBA loan. And it makes sense, right? Like these established companies may have already started their operations, so they may have some positive cash flow and a strong need for the money or for the capital, along with the ability to repay the lenders. So what does this mean for you? Well, if you have a new startup, it's not impossible to get an SBA loan, but the odds are more in your favor if you can wait maybe a year or 2. So maybe this means you can turn to alternative funding options like getting a private investor, or maybe getting a traditional loan, or maybe using some business credit cards to tide you over until you can apply and get approved for the SBA loan. And remember, you can use an SBA loan to refinance existing business debt. So getting more favorable terms and a longer term interest rate is something you can do in the future, even if you're using some traditional lending for now. Now, what I like to do is I bootstrap my companies. That means I usually offer a service that generates cash, and then I use that cash to invest into my next business venture. For example, one of my current companies is a tax firm, but my greater vision was to create a tax software. Well, rather than raising capital for the tax software company, I started off offering tax services where there was very little startup capital required, and now I'm using the cash flow from my services to invest into my tax software. Which, by the way, make sure you are subscribed to the channel because I'll definitely do a review on how to start a software company. Anyway, moving on to step number 2, you need to write a great business plan. Look, at the end of the day, anyone who gives you money wants to know one thing: can you pay me back, and ideally with interest? And so when you can provide lenders like the SBA or other traditional banks with a solid business plan, then you can give them confidence in your future business success. A great business plan usually includes a thorough explanation of your products or your services and what makes them unique and different, a comprehensive competitor analysis, an outline of your marketing and advertising strategies to get customers, and a 3 to 5 year financial projection of your revenue and expenses, and of course, details on how much capital you need and what you plan to do with the capital. Now, some people turn to business consultants or attorneys to create business plans for them, but what I like to do is use a free template from Law Depot. They will walk you through step by step everything that needs to be included in a great business plan, and then give you a professional documentation that you can actually present to investors. And I'll put a link to Law Depot down in the description below. Okay, let's move on to step number 3, provide financial statements. Remember, the SBA will want to know if you can pay the money back. So during the application process, you'll usually be given the option to provide additional information like a financial statement. Okay, one of the most important documents will be your income statement or your profit and loss statement that shows all your business income, all your business expenses, and your profits at the end of each period. So you should strive to have at least 1 year of this data collecting all your revenues and your profits. But if you don't have a profitable business yet, then you can include a personal financial statement to demonstrate to lenders your ability to repay as well. This could include some other sources of income, like maybe a separate W-2 job or some other side hustle. Okay, moving on to step number 4, maintain a good credit score. So a standard process in any SBA loan application is a credit check. They're going to want to look at your personal credit and your business credit history. So of course, the higher your credit score is, the more likely you are to get approved for an SBA loan. In fact, Fundera analyzed their customers and found that business owners who had a personal credit score of 680 or higher usually got approved for a loan. So what does this mean? Well, before you apply for an SBA loan, check your credit scores and see if you need to spend more time building up your credit instead of applying for a loan. Okay, moving on to step number 5, be prepared to offer collateral and provide personal guarantees. So the SBA does not require business owners to offer collateral, especially if you have already done really well in the prior steps 1 through 4. However, if your business is new and your credit is barely good enough, then offering collateral may be enough to actually get you the loan. Examples of this would include putting up your vehicles, your real estate properties, any equipment you have, and even your business inventory. Now I know this sounds kind of risky, but here's an important thing you need to know. Okay, most lenders will require a personal guarantee, which means that even if you have an LLC, if you fail to make loan payments, then you become personally liable for the debt. And this is a very sneaky clause that many people overlook when they're applying for business credit cards and business loans. Now, as always, what I like to do is remind my viewers that, okay, business is hard and debt is risky, especially for new entrepreneurs who don't have a lot of experience yet. So what I have done to become what I think is a successful entrepreneur is I've always simply bootstrapped my companies, and I raised the capital that I need on my own so that I don't have to give up equity or worry about paying back a bank or an investor or anything like that. All right, coming up next, you can watch my video on how to bootstrap your own business or check out another business funding video, and I'll see you over there.